Hey everyone, before we get started, just a bit of the boring stuff. The information contained on this podcast is general in nature and does not take into account your personal situation. You should consider whether the information is appropriate to your needs and, where appropriate, seek professional advice from a financial advisor. Now on with the episode.
If you can say 10%, fantastic. You're doing quite well. And in a short time, gone are the days where you have to pay 20% and all that kind of stuff. It's great if you have a 20% deposit, but it's pretty unrealistic.
It's not make or break anymore.
It's not make or break, that's right.
Hi, I'm Joe. I bought a house, and despite my experience in real estate, I still had a shitty experience. Apparently I'm not alone, so I've gathered the funniest and realest experts to teach Australia a better way to find their home. Welcome to the No BS Real Estate Podcast. Welcome back to the No BS Real Estate Podcast. I'm your host, Joe, and today we have a good episode lined up where we'll be talking to an ex-mortgage broker, and he's going to give us the lowdown on the process, the red flags, costs, fees, and more. I hope wherever you're tuning in from that you're having an awesome day and that work's not too busy. Don't work too hard. Today, I have one of my lifelong friends on the show. He's also an ex-mortgage broker, as I said, Adrian. Adrian, welcome to the show. It's good to have you, and I'm excited to get into your tips and tricks for buying a home.
Yeah, thanks, Joe. Thanks for having me on your podcast. I'm really excited to obviously share my experiences as an ex-mortgage broker and, get to the nitty-gritties of what people are looking for and what they should look out for, essentially.
Yeah, awesome. And look, you were a mortgage broker for one of the biggest national banks and a private lender, and now you've moved into asset finance. So how's life been treating you since you've moved?
Yeah, it's actually been great. It's a great challenge for me. For me, I like trying different things and understanding different types of lending policies. So, yeah, it was great working with some of the major banks. I did learn a lot about the process. Myself included, I've bought myself my own house a long time ago, and it was a very stressful process. So when I got to do mortgage lending, I thought, you know what, I want to make sure I give my clients the best experience I could. So I did it for a number of years and then moved into more of that private sector where I could give more options to clients. And that's generally what a mortgage broker does, gives them options essentially. And then recently I've moved into a asset finance role. So basically financing equipment for hospitals, day surgeries, private practices. So that's completely different to a home loan, but it's still the same principles essentially. So you've got an asset or a product and you need to make sure the client understands and it fits their policy essentially.
And that's awesome, all that experience. And I like that you use your own personal experience as a mortgage broker, and also as buying a home, because that, I think, a lot of the time makes such a difference when you've got someone who's been through what you're going through and then you deal with them as your broker and you just think at least they understand how convoluted this process is.
Yeah, absolutely. I think it's really important that you have to get a understanding of your client and obviously share your personal experience as well, because it's a trust thing. As we say, it's a big investment that you're doing. So if you can relate to your client, then that's the best way. And even if you have crazy stories or, tell them something that happened to you that was bad, so it makes them feel more comfortable that they're not the only one that's going through this process. I know sometimes, people will try and boast and make it, grander than what it is, but sometimes you're just going to be honest with your client, and the more honest you are, the more they'll feel comfortable dealing with you and getting it done essentially.
I think that's very, very, very true. And I always feel more comfortable when I talk to someone who's relating to me. So yeah, definitely. And I've got to ask, has there been any funny or strange experiences?
Yeah, there's been a couple, but one that actually I resonate really well with, and it kind of stressed me out with this client or this couple. They were really nice people, but the problem was I don't think they communicated with each other. So the issue was when I'd speak to, let's say, the wife, she'd ask me 10 questions. I'd answer all those 10 questions. Then I'd get a call from the husband about 20 minutes later asking the exact same questions. So it got to a point where, I would spend, 2-3 hours a day just talking to these two people. And I had to call them into the office and said, listen, you guys need to talk to each other about the questions that you have, because I can't keep, answering your questions and calling you every 20 minutes, essentially. And not to be rude or anything like that, but I said to them, hey, listen, I can't do this. I'm happy to answer all your questions in one go and then move forward. But to get calls every, hour from both you asking the same questions, I think, you guys need to communicate at home. And even their lawyer or conveyancer told me the same thing. He goes, I don't think they're on the same page with a lot of things.
Oh, damn.
And I'm like, okay, well, so this was just a drawn out process for them. But we got it done at the end of the day. It was a land and build. And I'm sure you're familiar with that at the moment. Yes. So it got funnier where she called me one day, 3 days before the settlement for the land. And she goes, Adrian, I want to get this loan now in a trust, a family trust. How hard would that be? And I said, extremely hard. It's not going to happen anytime soon because apparently one of her friends, which is very common in the mortgage brokering space, that a friend told me that I got this rate or a friend told me I could do this. So it's one of those things where, someone tells you something, you take it with a grain of salt, but you don't say that it can happen. And she was adamant that she wanted to do it. And then I kind of explained the process. It's very costly to do it. The process has to be reapproved, your loan, and we won't have enough time to settle. And I know in their contract with these kind of big builders that have land for settlement, they charge like 20-something% for late fees. So I said, I don't want you to get charged on late fees and I don't want to be held responsible if that was the case. So I explained to her in a nice way, even though it was very frustrating. I explained it to her and we ended up getting it all sorted for him. But that was probably one of the highlights of my mortgage brokering segment, I guess you could say. 3 days before settlement,
that's quite the turnaround.
Yeah, and the worst part was it was a Friday she called me as well. So the weekend, obviously we don't work weekends, or I try not to work weekends unless it's really urgent. But with this couple, I said, no, sorry, unfortunately, it's not going to happen anyway.
But also with the banks being closed, like on a weekend as well, it doesn't help.
So they don't have credit. Credit don't work that assess your loans. They don't work on weekends. Yeah. They work Monday to Friday. Yeah, they might work sometimes extended hours depending on the time of year. But most of the credit officers that are working are generally working, 8:30 till 5:30 essentially. So you won't hear back from them until the next day, or if it's a weekend on the Monday.
Yeah, right. And just a side question to that, is there any benefit to having things in a family trust? Like if someone's listening out there that thinks, oh, I've got a family trust, maybe I'll do what this couple did, obviously with a lot more time. But if they went to their mortgage broker, are there any benefits to that?
Absolutely. There's many benefits, tax benefits for starters. Obviously, you have to talk to your accountant in regards to, what kind of benefits you would get out of it. That's more for investment side of things, but also protects you. So, I know it sounds bad, but there are people out there that, find the right person. And that person might not have the right intentions, and if they find out that you've got a number of properties in your name, and after 12 months you're classified as de facto anyway. So if they're contributing to your wealth, then they're entitled to 50% of your your assets essentially. And that's the thing for me is I wouldn't want to be in that situation where I have to deal with that. Like I've worked so hard for what I've got, and then for someone to take that away from me just like that, it's one of those things that I would definitely recommend it if you've got the money and you've got a really good lawyer and a good accountant. Definitely have a discussion with them about that. And if you actually have it anyway, it's definitely worth doing it because it might have the process a little bit. It might take the process might be a little bit longer to get approved, but at least you're more secure. And long term, it's going to be better for you if you are looking to grow your portfolio, which I'm sure a lot of people are. They don't definitely want to have one house. They might want to have a couple. There's nothing wrong with just having one house at one time because it can be sometimes a headache to have multiple properties. But it just depends on what you feel comfortable with at the end of the day. So
for sure.
you do your research and ask questions and go from there.
Yeah, nice. All right, well, let's get into the nitty-gritty of it. So officially, we're talking about the established home buying process, so buying an established home. Officially, what is the role of your mortgage broker? So
officially, a role of broker is to pretty much ideally help a client through the home buying process and really understanding their financial needs. And I'll go into a bit more detail. So the home buying process may include, them getting a pre-approval for starters. So having the discussion about their finances, really understanding, okay, this is how much you can afford. This is realistically what you can buy. I know when I was a mortgage broker, I'd actually help people find, homes. And by saying that, I would go on realestate.com, show them a couple of properties that are in their price range or in different areas they may not have considered. And it gives them that understanding, oh, look, this is actually pretty easy. It's not really daunting because, sometimes people just get the pre-approval and they'll just sit on it for 6 months and then not really chase.
Do anything with it.
Do anything with it. And And for me, I want to make sure that, they're in the process. Get into it now and do it. It's exciting. Once you find that right property, you sign that Section 32, you give it back to your broker and you say, hey, listen, I found a home, let's get it sorted. And then you get settlement. It's a great experience, and it's one of those things that's life-changing as well. So it's really the whole process of home buying. So people say, oh, they just do loans. No, they should be actually helping you, find the conveyancer, because a lot of brokers will have really good conveyancers they work with. They might have real estate agents that they've partnered up with too. And it's not so much of it's a kickback from XYZ. It's just more about, them trying to help their client out. That's what a really good mortgage broker does. And they also understand their financial needs. Is this the type of loan that I need, or have I really understood the client and what they want? It's all good and well to say this is how much you can afford and then see you later, but it's actually really understanding, okay, this is what would happen if, you were to do a loan of this amount. Could you afford that? Do you think, your living expenses now, can they be reduced to afford this new commitment that you've got currently?
So you're sort of like really giving them that holistic view, I guess, of when you buy a property, what it's going to look like in real time, can you afford it?
Absolutely. And it's a long process too. Sometimes I've had clients that I've been in my portfolio for 12 months before they even bought any property. So you really get to know these clients on a more of a personal level too. And
for sure.
And you want to make sure that they feel comfortable, because at the end of the day, a good broker, word of mouth is so important for them. Referrals, that's what they rely on essentially. If I do a good job for you, Joe, you'll tell 10 of your friends, hey, Adrian was fantastic, go see him.
That sort of leads me into my next question here. So finance is one of those topics that if you don't have much experience in it, it can be tricky, overwhelming. What are some of the things that people should prepare or have ready to ensure a smooth lending process that helps you guys?
Yeah, great question. I think for me, when I was a broker, the most important thing that I found, people didn't really know their monthly expenses, so they won't break it down. So I would send out a little sheet that would have a breakdown of the monthly expenses people spend per month. And when you're on the spot, you kind of forget. Oh, I forget about this. I forget about that. So that's something that I think is really important to really understand. What you're spending your money on each month. And then you can actually say, oh, geez, I actually spend $2,000 a month when I should be only spending $1,500 a month, because that's going to affect how much you can actually borrow as well. So if you're living lavish lifestyle, it will affect your borrowing capacity. But also having just, your pay slips, a couple of pay slip bank statements. I'll go into more detail. So most brokers will have like a little app they use that provides them with it's like a third party, essentially, application where you type in your details for your login for bank statements, and it'll just pull out the actual account that they need. So rather than having to print out all these statements, it's just pretty much I think it's statements.com or something like that. And basically you just put in your login details for your internet. It's all secure. It's all they get is just the statement they need for the account your pay gets into. And that's it. So gone are the days where I used to get people coming into the branch and saying, hey, can I get 6 months worth of statements? And straight away, 6 months, that's a statement for a home loan. So you'd have that conversation with them, and then they'd be like, oh, I'm dealing with a broker. And you'd be like, okay, great. Has he given you these options? And where you try and find out where they are at that stage. So that's pretty much one thing it's definitely saves people time, because everyone's time poor these days. So no one's got time to do anything. But if you can help your broker with that, kind of be prepared, have some pay slips, have some basic documents, IDs, because sometimes some banks need two forms of ID. So they might say driver's license, Medicare card, or a passport is something that, you want to have, make sure it's all up to date, just so that way you can ensure the broker has a copy of it and there's no issues. Disclose any loans or credit cards, because they'll find out that you've got it, because if they have to look through your statements, they'll see it. So just be honest with them and say, hey, listen, I've got X loan here, credit card here. Is this going to affect our borrowing capacity? Yes, it may.
Well, I was going to say, with personal loans, and that, I've noticed that sometimes, like I know even for myself, when I went in, I had a personal loan, and, my partner and I had to make the decision, do we refinance it or do we just pay it off? And I made the decision to just pay it off beforehand. But what should people do if they do have that situation where they've got their personal loan, and then they're going to buy property? Should they pay it off, or what would you do in that situation, or what would you recommend?
If you have the funds to pay it off, I would definitely pay it off, because the bank looks at it as a commitment. So let's just say you've got a personal loan of $20,000, but your commitment for that personal loan is $400 a month. Well, they'll take away that $400 can go into your mortgage, and they'll say, okay, well, you've got to pay $400 a month for this personal loan. That means that it'll affect your borrowing for the home loan that you're looking to buy. So if you've got those funds to spend or splurge on, pay the loan out. If you're on a crazy income where that doesn't really matter that you've got a personal loan and it's not going to really affect your borrowing capacity, by $5,000-$10,000, doesn't really matter, then keep the personal loan open. Try and pay it off, obviously, because you're going to pay higher interest on a personal loan than you are on the mortgage. And what you could do, let's just say you do get the loan, you get your home loan and you still have the personal loan, maybe in 12, 18 months, if the property's gone up in value and you've paid down your home loan a little bit, you can maybe refinance that personal loan into your home loan, just so that way it helps you with the commitment, because obviously it's going to be less of a burden of it for you to have to worry about, that extra $400 or $500 a month when you could be saving that and putting it somewhere else.
That's really good advice and information, because I think a few people get stuck into that. And that's the other thing with Afterpay and things like that. I know that they're treating them like hire purchases, the banks and lenders these days. So do you know any information, or can you give any advice for people who are using like Zip Pays, Afterpays at the moment, and then they're going for a loan?
Yes, it is very dangerous. From what I've been told, it's one of those things where the bank looks and says, well, if you can't, especially Zip Pay, because it does do a credit check on you, whereas Afterpay is a little bit different. They don't do any credit checks or anything like that. So it's not actually a facility, whereas with Zip Pay, it is a facility where you've got a limit. So it's almost like a credit card. And they'll look and say, okay, if you've got a facility for $2,000, well, if you can't pay something up in $2,000, that's not good. We don't really want that client, because if they can't pay a simple $2,000 a loan, essentially mini loan, how can you think they can afford maybe a $500,000 loan? That's how they're going to look at it. They're going to look at risk and their appetite to actually lend that person money. With Afterpay, a little bit different. As long as you've got your balance cleared and there's nothing owing on it, there's no issues. But I would suggest with the Zip Pay, close them off if you can, because it just saves you having to worry about asking those additional questions from the lender saying, oh, hey, you've got this. Is there anything owing on it? And then you might say there's $2,000 owing on it, but you don't have that money to actually pay it off because you're paying it in installments. So yeah, I would try and avoid it if you can, but obviously everyone's going to do what they think is right for them. So, but just be aware that they will ask that question, and you may have to pay it off, or you might have to provide evidence to say, yeah, this is what is owing on it. And then that would potentially affect how much you can borrow again.
Yeah, right. And that's good information, I think, because I know I've spoken to a few people, and even myself, like having the Afterpays and going through a loan process, I had to pay everything off. And not that there was a whole heap, but it was just the fact that they said, can you just close them off? And I'm like, oh, yeah, I just like Afterpay because I can drop $500 on an outfit and then, on a few things and then pay it off. It's a trap in that way.
I'm exactly the same. And it is a trap, and I think they feel like they have to ask you because, even if it's just a small commitment, it's still a commitment at the end of the day.
Yeah.
And you probably noticed too, if you paid off your personal loan, all those little things that were paid off, you noticed your borrowing capacity went up a little bit, because obviously they're reducing that commitment and that exposure essentially to more loans and more risk. So the bank is very conservative. Most banks are very conservative, especially a few years ago. It was a lot harder to borrow money. But now, with obviously the current environment they're in, it is a good time to go to the bank or go to your broker and say, okay, how much can I afford? 3 years ago, it might have been, let's say, for example, $500,000 you could borrow. Now it might be $525,000, just because of the way the market's shifting. And it makes a huge difference because property prices are going up every day. And as you're probably aware, clearance rates, 90% clearance rates, which is absolutely crazy. I can't believe I'm actually seeing that now. Whereas when I first started doing lending, it was like a clearance rate of 30%. And I was telling clients, lowball these guys, don't give them what they're asking for, because obviously they can't sell it, the home. So I was a little bit ruthless like that, because obviously I wanted my client to buy a property, but also not let them wait and have to rush and have that process. Oh, I missed out on the property, which is a really good price because I waited.
Yeah, definitely.
Yeah.
And look, I know you've sort of touched on it a little bit when I asked you about the role of a broker, but when people sort of, start to engage the process, what process do they follow when they apply for a home loan? Yeah,
great question. So what we probably essentially do is you'd probably engage in a broker first. You maybe do a Google review with others, so seeing what their kind of comments are, because obviously everyone wants to have a Google review, especially being a broker. So you kind of do your research, you do due diligence, as you'd say. And then if you feel comfortable with that one, then you go have a chat to them. You discuss, what you're looking to buy, what area you're hoping to buy, how much you want to spend. And then what they'll do is they'll run through like a borrowing capacity on how much they can you can borrow based on your wage, based on your commitments. And then once they kind of work out what you want to do, what you want to spend, they'll give you generally 3 options for lenders and say, okay, let's say CBA is one option, Westpac's another option, and then maybe ING Bank is another option. So they want to give you a variety of options so that way you can feel comfortable in making sure you're making the right decision. They will still lead you into the right bank that will fit the lender's criteria and that will fit your criteria as well. So what that means is basically making sure that your pay cycle, your structure of where you live, all that kind of stuff fits that bank's policy. And if it does, then I'll say, okay, this is probably the best bank to go with. Because at the end of the day, they're going to try and give you the best advice. And then once you've decided on the actual bank you want to go with, they'll give you a pre-approval. And by a pre-approval, it just means that the bank is willing to say, yep, we're happy to lend you money on, on this basis. Doesn't necessarily mean it's going to be a formal approval. It just means that you can start looking for a house and in that budget. And then what will happen is once you find the right property, obviously you know better than anyone, you get a contract signed. And then once that's signed, you pass it on to your bank or your broker. And then they'll basically finalise all the loan documents, make sure that there's no valuation needed on the property. The bank will do their due diligence. And then pretty much you'll get your formal approval as what the bank would call it. You sign those documents and then you pretty much wait for settlement, whether it's 30 days, 60 days, 90 days. That's pretty much it. That's pretty much the process that they will go through.
Is that a drawn out, like if you looked at a time period from when you, I guess, enter an engagement with a broker, is that something that you think is drawn out over 60 days or, even longer, or is it a pretty quick turnaround?
General turnaround, it just depends how quickly you want to buy something and how quickly your broker can actually get on top of it. I know that some banks are quite slow at the moment. They're pretty much suggesting to clients between 45 and 60 days is where you want to settle on a property. But it depends on you too. Like how long do you want to draw out the process? If you're talking about from once you first engage the broker to when you finally find the right property, that can range. That could be 2 weeks, 12 months. It just depends on, it depends on the person that you're dealing with. At the moment, what I'm finding and what I'm talking to my friends about who are still in the actual banks and that are mortgage brokers, people are just going crazy. The market is going absolutely bananas and the banks can't really keep up. So what they're trying to do is they're trying to set realistic expectations, and your broker will also set that expectation with you as well and say, hey, listen, this bank is a few days behind in processing the formal approvals. So make sure if you are going to an auction or you're going to buy a private sale that you say subject to finance and you've given yourself enough time to get that approval in place. So usually what happens is if you go to an auction, it's unconditional. So there's no subject to finance. It's basically you go buy that property and the bank needs to pretty much approve it. But in most cases they should. And if you go through a private sale, you can then put subject to finance. And then if finance falls through, you don't lose your deposit or anything like that. I think it's definitely really important. And that's another thing going back on that. It's not so much my role, but more so the conveyancer, making sure you provide the contract of sale to your conveyancer before you sign any documents, just so they can go through the document, make sure that everything's up to par, because you don't want to have any sort of surprises at the end, especially when you put your deposit down and it's usually 10%. So if you're buying a $600,000 property, that's $60,000 that you could potentially lose if something was to be not right, essentially.
Yeah, definitely. And are there any particulars that people should be wary of or consider before they submit a home loan application, like things that might not get them the approval at the end of the process that they could possibly fix before they go there?
Yeah, I think just making sure your broker understands your financial position. So you're not applying for a number of applications for different banks just because, you want to get the best rate. Your broker should know where the best bank will fit for you. And sometimes, rate is good, but also not so good because you're going to get what you pay for essentially. And it will affect your credit rating too. So the more applications you put through. So I've had clients that have put through maybe say 4 applications, pre-approvals with different banks. And then I've had to ask them the question, why have you done that? That's on your credit rating, because they'll look at it and say, well, this person, whether they've got approved or not, might be a risk to the bank. And they might say, oh, well, this person probably got declined at ANZ. That's why they're jumping to CBA, or they're going through to ING and ING said no. That's why I think a broker is really good in that regards, because they really understand the market. They'll know, okay, which banks are really good at the moment and which ones are very conservative. And sometimes it's good to be conservative, but sometimes in this market, you can't be conservative because the prices are going so crazy that it's harder to afford, money. And it's hard to save a deposit too. 10%, I used to say clients, if you can save 10%, fantastic. you're doing quite well. And in a short time, gone are the days where you have to pay 20% and all that kind of stuff. It's great if you have a 20% deposit, but it's pretty unrealistic.
It's not make or break anymore.
It's not make or break. That's right. There's other options that you can do. You can pay lender's mortgage insurance, which people definitely get scared of. Oh, what's lender's mortgage insurance? Well, lender's mortgage insurance is basically an insurance for the bank to say that, yes, you haven't put your 20% deposit down, but you're willing to still give you money, and you pay that little bit on top of your loan, which I think is not a bad thing, because the proper way the property market is now, you'd understand too that you try and save that extra 10%. Price has gone up by $50,000. Doesn't mean you can borrow more. It just means that you've missed out on that property that was, a lot more affordable for you and your price range. So, and I know what agents are like. They like to push things and say, yeah, it's all right. You'll get it, no worries. But there's certain circumstances where I've had some people, sorry, like this is out of your price range and it doesn't work for you. Maybe try a private lender. That's something that we could definitely look at as well. But with the private lenders, they're a little bit different again. They'll look at more so a 40% deposit. So that, yes, they've got less restrictions, but they want more of a deposit. They won't say, okay, we'll take 5% deposit. They'll want more for their security, essentially.
Wow. And like in some of these things, like I know you mentioned credit ratings and things like that in, with what we've just talked about, but what happens when an application is rejected? Is there a wait period before they can reapply, and does that hinder their chances when they have to reapply?
Usually there's about a 6-month turnaround time that you'd want to wait if you were to apply for that bank again. Yeah. However, if you were to be declined from a bank, it doesn't necessarily mean you can't go to another bank. It just means that their policy doesn't fit their criteria for you to borrow money with them. Yeah. So a good broker will talk to their BDM first in regards to making sure they've got a client. Say, hey, I've got this client. They're full-time. One's full-time. They've been there for 5 years. The other person's casual and they've only been there for 3 months. Would that be something that we can look at? And then the business development manager will say, yes, this fits our criteria, put the application through. Or they'll talk to credit first before you put any sort of applications in, just to make sure that, it's definitely something that they will look at or consider before putting an application in. Because everyone understands, we don't want to put an application through, waste time if it's going to get declined. But also you got to take that risk as well. Because sometimes there's always scenarios that you might think are crazy and are out there, but the bank will most likely approve it. If you give them a good enough reason to explain yourself really well to that credit officer so they can understand in layman's terms that this is how the person works, this is what their income is, X, Y, Z, they're more likely to approve it, essentially.
And, when making a decision about, the type of home loans there are, because there are so, many variations like fixed or variable, what are the different types and what are the benefits to them? Yeah,
there's actually so many options. That's what people are kind of get flustered with as well. And a broker will definitely explain to you the options. They won't try and give you too many options. So that's why they'll understand of like, okay, if you're on a budget, this loan will get it for you. If you've got in budget's no issue, then we'll go for the bells and whistles. So how I explain it, you've got like a no frills loan, which is a very basic loan, no fees, no nothing. It's just a loan. You just pay into it from your account and direct debit. I just say that's like a Toyota, driving a Toyota. It gets you from A to B, but it still does a job at the end of the day. Then you've got, your fully loaded home loans, which are pretty much, you've got your offset accounts, which help you save money. You've got, credit cards. You can get free credit cards. You pay an annual fee on those type of loans, but you get a better interest rate. So the bank's willing to give you a discount on your home loan because you're getting the bells and whistles, as I'd like to say. And that's like a Rolls Royce of home loans. That's got everything you need. And what I find most people do, they'll go for that sort of product because, $400 a year for them to save maybe $5,000 in interest per year is definitely worth it. So you want to try and, pay that kind of money to then save that type of money. But that's obviously your broker explaining to you in a very good detailed way. And then obviously you've got your fixed and variable. So most people now are fixing from what I've heard because the rates are so great, but they'll only fix it for maybe 2-3 years max. And then you've got your variable portion. So years ago, I would say to clients, hey, look, fixed rates are good because you've got a fixed repayment, but are you prepared for when that fixed term ends that the rate might jump up to a whole percent? Can you afford to pay that extra percent straight away? Because whereas variable, it gradually goes up. Interest rate changes, it gradually goes up. Or what people can do also is a split. So they can say, okay, I'm going to fix, let's say maybe $100,000 variable, and then the other portions say $300,000 is going to be fixed. So at least that way, you've got a goal, and so I can smash down that $100,000 because I know I've got extra income coming in. I want to reduce my loan as quick as I can. Okay, great. Gives you a goal. And then once that, 2-3 year term ends, or it could be longer, depends on what you want to do. But generally 2 to 3 years is the prime time to do that, because you never know, things might change and you might want to refinance your home loan because there's a better deal out there. Yeah, and that's what a mortgage broker will do too. Review your home loan as well. So that's why they won't try and fix you in for too long, because obviously things can change and rates can fluctuate a lot.
And it's good to know that you can actually do both portions, like the fixed and variable. So that's really good information that you can do that on your loan. I think a lot of people maybe know that if their broker hasn't advised them ahead of time. So definitely.
Absolutely. And it's a good thing because, you can do it. You can definitely do both and still have that flexibility of still paying down the loan quicker, whereas a fixed portion, you can only put a certain amount per year onto the loan. Yeah,
definitely. And being an ex-mortgage broker, you would know that sometimes there are some red flags when you get a questionable lender. If there is a listener out there that's feeling a bit unsure about this situation, what would be your top 3 things that, if they're happening to someone right now, you need to find a new lender?
Yep. Okay. 3 things. Number 1, if your broker asks you for money up front to submit your loan, brokers get paid by the bank, not you. So essentially, if they're asking for money, it's obviously because they're dodgy, or not so much dodgy, but they know that you might not be the right client for that bank, but they're trying to get some sort of money up front to then say, well, I did work for you, it got declined, well, then pay me out. Because there are some clients out there that have got, that are very, I'm not saying your average person, but, some clients have got really bad credit ratings, or they're a business owner and they want to do a low doc loan, which is pretty much low documentation or no documentation. So some brokers will ask them for money. You see that more so in the commercial space when it comes to commercial lending rather than the residential. But years ago, it was very prominent that brokers would be asking for money, and big money. They might ask for $5,000-$10,000 upfront to pay for it. And that's where that ACRA came in and said, no, that's not right. That's why mortgage brokers got a really bad name for a long time. Yeah. And people would start going back to the bank and saying, hey, I'll talk to the lender in the branch, like I was. And then I moved into the broker space because it obviously changed the culture when they were saying, no, we want to revamp what we look like and how we treat clients. And now brokers go above and beyond. A really good broker will go above and beyond for their clients just to make sure that they're happy and they're getting the best deal possible, because they know that, you know what, I'll get paid by the bank, but this client's going to be a long-term client for me, because at the end of the day, they can refinance you in 2 years' time and then get paid by another bank again. So, that's number 1, would say. Definitely make sure that if they're asking for fees, run for the hills and say, okay, thanks, let me think about it, and then just do it again. Good tip. Or block their call. Just block them, just so that they don't keep calling you. Probably the second one is if they don't really keep you updated in the process. Sometimes brokers can get busy, so don't expect them to be answering your call straight away. They should call you by at least close of business day, depending on the time of day. So if you're you're calling at 5 o'clock at night, expect a call tomorrow, morning, lunchtime, because obviously they'll be finalising for their day what they've done and making sure they're processing what they need to do. Sometimes, you can get brokers that will call you at later time, but you got to set realistic expectations. I'm sure you don't want to get a phone call, at 7 o'clock at night, maybe with your family, or, you just want to relax. You don't want to be dealing with that kind of stuff. So, it works both ways, I think. Just be, realistic and set expectations. So my number 3, if they don't contact you once the loan is settled, at least 1 month after your loan's been settled, that's a bit of a red flag. They should be just checking to make sure that the loan payment has come out. And then maybe 6 months. I would suggest 6 months to 12 months, at least 6 months. They will say, okay, how are things going with your loan? And then they should be doing an annual review. So every 12 months, they should be doing an annual review of your loan, making sure that, your rate's good, calling their bank or the bank you're with, saying, hey, I want a better rate for my client because I know XYZ bank is good. They're going to give you a better rate. And then most banks will okay, let's see if I can, reduce your rate a little bit. And then they'll call the client and say, hey, guess what? I just got you a better rate on your home loan. So it's that aftercare service, which is really important, I think.
And I think that's a bit of a gap that a lot of people don't know, because even for myself, it's one of those things. You get your loan, your happy days, and you move on, and that's it. It's all done. And
you forget about it.
You forget about it, but they are your broker at the end of the day. So it's one of those things that, that aftercare would be really appreciated to have someone give me. I know if my broker rang me in 6-12 months and said, hey, your properties, you've moved in, I've looked at your home loan again. So that's awesome. It's good to know.
Yeah, and they should be reviewing the actual home as well and saying, hey, the property's gone up X amount of value. This is fantastic. So you've obviously made a great investment moving to this area or doing this essentially.
Yeah. And with lenders, because at the moment, your first home buyers grants, all of that stuff at the moment is pretty hot. Who helps with that application? Because it's quite in depth. Like, do you guys have a level of service as a mortgage broker to help out?
Yeah, it's one of those things that's very scary and it's a lot of detail. But yeah, absolutely. A mortgage broker should be able to help you with that, with at least the paperwork. Most things are pretty straightforward, ask for your name, details and stuff like that. But then what they'll be able to do, they'll be able to verify your identification, go through the whole process. I thought when I first started, when I did my first home buyers grant for a client, I thought, no, the conveyancer does that. No, they don't do that. They do the stamp duty concession. So when you go and apply so you can get a concession if you're a first home buyer, they'll do that process. But actually applying for the grant itself, the $10,000 cashback essentially, yeah, that would only work if you're buying a new property that's being built within 12 months or you're actually building a property. So that's that first home buyers grant, the $10,000 bonus, or if you're in rural areas, it's $20,000. That will only be paid if it's a new property, basically.
Yeah, it's good to know that you guys actually help with the paperwork, because I know when I went through my one, it was intense to go through that stuff, and our broker was quite good at helping us with all the paperwork, but I wasn't sure if that was part of a service or if she just sort of did that to help us out at the time. So it's good to know that they can.
Yeah, they definitely should do it because they're going to be applying for it in their application anyway. So they'll have to submit all the documents for you when they go for the application. So when they do the application, there'll be a ticket box saying, first home buyer, yes, ticket. Then they'll have to put that application in there. So they've got to make sure it's all right, because if they go to the bank and say, something's missing, then they have to go back to you and it just looks bad on them as well. Sometimes you do miss things, don't get me wrong. There can be that time, but in most cases, it's more around, making sure that, you help them as much as you can, because it is their first home at the end of the day. And it's a daunting experience. It's one of your biggest commitments.
Yeah, definitely. And look, Adrian, we're coming to the end now. My last question for you, what advice can you give our listeners who are going through the lending process that are feeling a bit stressed and perhaps not fully understanding what they've signed up for?
The best thing to do is, if you don't understand something, ask them to explain to you in more detail or in a way that you understand. There's definitely no stupid questions. Your broker should make you feel comfortable with them. And at the end of the day, it's one of the biggest financial commitments you're going to make. So whether it's your first home or your 10th home, there's always something that's going to change. So just ask the question. Don't be afraid. And if they're kind of like, trying to brush you off, then they're the person you don't want to deal with. They should be making you feel so comfortable that, you know what, this is the guy or girl I'm going with. I want to make sure that this is a streamlined process. And sometimes things can happen and it may, go out of whack a little bit. But if they can bring that back in and make you feel comfortable, then go right ahead. It is a big financial commitment. And what most average homes these days are over that $500,000 mark these days. So really, you'd be looking at a loan of, $400,000 potentially, which is a big commitment, especially if it's your first home. So ask me as many questions as you can. And if you don't understand something, just tell them, hey, I don't understand. Can you please explain to me in a different way? Or can you just re-clarify? Really
good advice. And Adrian, I've loved having you on the show today. You've given me and the listeners, I think, a lot to think about when it comes to lending, that's for sure. And if anyone needed any assistance with, I know, asset finance, but just general questions perhaps around lending, how can they get in touch with you?
Yeah, absolutely. Get in touch with me. You can email me. I'll get Joe to give you my details. So if they've asked, you can definitely do that. But I'm more than happy to answer any questions you may have. You can find me on social media, LinkedIn. It's Adrian Papak, and I'm more than happy to answer any of your questions. And if you are looking for a home and you need someone to assist you, I've got plenty of connections that I vouch for, and I know they've helped my friends out before and helped myself out too. So I'm definitely more than happy to assist anyone that I can.
Awesome. Well, thanks so much, Adrian. That's great. I'll put Adrian's details on our website. And thanks again. And everyone, you can catch all of this info on our website. I hope you enjoyed delving into the land of lending. And I'll catch you here next time for another episode of the No BS Real Estate Podcast. Thanks for tuning in. Have a good day wherever you are. Now it's time for our weekly contributor, Purple Pingers, with the latest No BS story.
All right, thanks, Joe. So I want everyone to picture this. So pretty much, especially in Melbourne, if you're buying an apartment, you're probably going to be spending less a week on a mortgage, than you are going to be on rent. And if you couple this with the fact that you don't ever have to deal with a property manager for the rest of your life, that's all I have to say about that. Thank you.
You've been listening to the No BS Real Estate Podcast. Did you know we're building a home buyers community to give Australians a better way to find their humble abode? Sign up now and we'll send your first home buyers checklist straight to your inbox by visiting www.abodi.com.au so you can say buying your home was the easiest thing you've ever done. Thanks for listening.